What I find interesting about Tesla, Kevin, that it actually is against its peers that are the domestic Chinese manufacturers, but it's not actually on top when it comes to the numbers, on a numbers basis. It did on percentage basis month over month, but can you tell us a little bit about how its competitors performed versus Tesla during that quarter?
Yeah, so the biggest competitor that they have right now is BYD, and they actually delivered around 274,000 vehicles for the month here, and that was actually around a 57.5% increase on a year-over-year basis. But one thing to note, Nicole, BYD really does focus on selling hybrid vehicles. So right now, China's data kind of mixes in hybrid as well as just pure EVs or BEVs, electric vehicles. So sometimes this data can be a little bit skewed, and the reason why they kind of mingle these two data points together is because the majority of the population that's buying these hybrids are really only utilizing the electric portion of the hybrid vehicle because they live in predominantly populous areas.
Have you ever wondered what Tesla's market cap will be if the potential valuations of Robotaxis, Cybertruck, FSD, and robots are all factored in? Tesla's unique position in the EV and sustainable energy sectors make it a compelling candidate for a market cap that's huge in the future. Right now, it's not just about making cars, as Tesla's impact already goes far beyond the automotive industry. It's actually sparked a cultural shift towards sustainable transportation and technology, and this cultural influence can continue to drive interest and demand for Tesla products. In today's video, we're going to be talking about the possibility of Tesla being valued at up to $10 trillion by 2030, and its stock price following suit to reach a $3,000 share price. We will also explore the key factors that could contribute to Tesla's continued success in the years to come. So, without any delay, let's get started.
It's time for a look at developing stories. Let's bring in Kevin Green, senior markets correspondent here on Schwab Network. And this is some big news. Hilton announcing today that EV owners will in fact have a place to charge their vehicles. Thank you, Tesla. Tell us more about that.
Yeah, definitely. And actually, Hilton already has around 1,148 U.S. Hilton or Tesla chargers, if you will, and they are going to expand that. They did announce today that they're going to expand that to over 20,000 Tesla Universal Wall chargers here at around 2,000 properties. And this is just a way for them to be able to obviously cater to their customers, but also acknowledging the fact that the EV revolution is starting to take hold here. Now, the specific locations are not identified at this point in time, but you should suspect that we will probably see a pretty significant focus when it comes to California, Texas, and some of the other markets that have seen a really big boom when it comes to the EV charging, the EV market in itself here. So right now we are seeing the shares for both companies down on the session, but we are seeing a lot of volatility in the equity market as a whole. But I would be very curious to see if we see other competitors for Hilton taking the same type of steps here. And this is, once again, one of the areas of Tesla that continues to grow at a rapid pace. Actually, it's the fastest portion of their business that is growing right now. And it's the one that actually does generate the most profit or has the best operating margins, if you will. So this is a very interesting opportunity when it comes to Tesla. I would not be surprised if we continue to hear other news like this coming from other competitors, not only just within the hospitality space, but in other spaces as well, especially when it comes to retail.
Tesla will report third quarter earnings in late October. And in the 3 months that ends in September, Wall Street expects the company to earn 80 cents per share on revenue of $24.67 billion. This compares to earnings from a year ago, which came in at $1.05 per share on revenue of $21.96 billion. For the full year, earnings are expected to decline 15.5% year over year at $3.44 per share, while full-year revenue of $99.78 billion would rise 22.5% year-over-year. Hey guys, and welcome back to Tesla Tomorrow. Until recently, investors who have held shares in Tesla over the past months have begun to question their decision, many of which have probably already sold their shares. Tesla stock has fallen more than 6% over the past month, which puts the stock in negative territory in the trailing 12 months. Down 11.6%, while the S&P 500 index has risen 13.8% over the past year. Since the automaker reported its second quarter earnings, the stock has reversed almost 20%. However, this same stock has rewarded investors pretty handsomely, surging 98.9%, while the S&P 500 index has risen just 17.6% year to date. Tesla's one-month dip has sparked increased competition and fears of margin pressures caused by price cuts. These were major points for Tesla bears, as many predicted even lower Tesla stock prices owing to decreased margins. However, we believe that there are still tons of reasons to expect Tesla stock to march higher, and we're going to get to those in a moment. But before we carry on, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. There are several reasons why Tesla's market cap will soar over the coming months and years. First and foremost, Tesla's relentless commitment to innovation is setting it apart from other EV makers. Its groundbreaking work in battery tech, autonomous driving systems, and energy storage solutions all position this company as a leader in the rapidly expanding electric vehicle market. In a world increasingly focused on sustainability, Tesla's core mission of clean energy aligns perfectly with global environmental goals. This not only attracts conscientious consumers, but also investors who see the long-term potential in green technologies. Tesla's vertical integration model allows them to have full control over production, and that allows them to reduce costs and adapt quickly to market changes. Its global expansion is also another crucial factor. With manufacturing facilities in China and plans for more factories worldwide, Tesla is strategically positioned to tap into larger markets and reduce production costs. The market has quickly forgotten the strong Q2 results that Tesla provided, which showed impressive growth relative to last year's figures, with the company producing 480,000 vehicles and nearly 466,000 delivered. Tesla's produced 83% more vehicles and delivered 86% more than it did last year. Tesla's market leadership is undeniable. It is the front-runner of the electric vehicle market, and being an early entrant gives it a significant edge as the EV market continues to grow. The EV maker is set to unveil a highly anticipated launch of the Model 3 Highland, which is likely to drive higher deliveries in the second half of the year, as it is rumored to be priced below the current Model 3. Tesla is also betting on its FSD software, which is poised to re-energize the company's profit margins once it is fully operational. One thing is certain, FSD will be the birth of the autonomous vehicle revolution. The platform is designed to automate Tesla vehicles so they can operate without a driver behind the wheel. Tesla's FSD is already at level 3 automation, which means that the driver should be engaged at all times. However, once FSD can navigate autonomously, it will not only boost Tesla's profit margins, but it will also be a profit center of recurring revenues for Tesla through the company's ambition for robotaxis. Tesla's investments in autonomous vehicles like full self-driving packages could revolutionize transportation, and if successful, it could open up new revenue streams and significantly increase the value of every Tesla vehicle. One often overlooked asset is Tesla's vast data collection from their vehicles. This data provides valuable insights for product improvements, efficiency, and even innovation, and they will be key areas for Tesla to reach full autonomy. Similarly, Tesla's charging network is another key component of its business model. Tesla has built a global network of superchargers, which are fast charging stations that can replenish the battery of a Tesla vehicle in minutes. Tesla also offers destination chargers, which are slower charging stations that can be found in hotels, restaurants, and other places where customers may spend some time. Tesla's charging network gives its customers convenience and peace of mind as they travel long distances and they don't have to worry about running out of battery. Beyond just cars, Tesla's energy division also offers products like solar panels and energy storage solutions. As the demand for renewable energy soars, the segment of Tesla's business could also see substantial growth. If Tesla can talk up its supercharger network, energy business, and even AI-driven FSD path, then Tesla will begin its drive towards $3,000 and higher as the collective value of its various segments continues to trend upwards. Although the stock price is nowhere near this value, it could mean that instead of staying bearish on Tesla, now may be a good time to buy some shares. Do you think Tesla might hit its market cap of $10 trillion by 2030? Let us know. And don't forget to tell us what your valuation of Tesla is. And if you found this video informative, hit that like button and subscribe for more exciting content. And don't forget to click on this next video on your screen if you want to know more about what Tesla's been up to over the last few days. See you there.